It is a major move on Wall Street. All three major indices are up more than 2%, and investors are elated to see a ceasefire in the war with Iran. To help us sort out all of the details and what this means for your 401k, because I know you've been peeking at it and it's been giving some of us heart palpitations here. Sammy Azzouz, managing partner from Savant Health Wealth Management, joins us. Sammy, thank you for being with us.
Absolutely. Thank you for having me.
Okay, so now, Sammy, this is about a 1 month high for the market. So is today an indication on what's to come? Do you think there's still a chance for Wall Street to wobble again? What's your take here?
Yeah, I think there's still a chance for the market to wobble, but hopefully we've seen the lows and won't reestablish new ones. There's a few things to consider. Wars don't have clean endings. This is a 2-week ceasefire and a reopening of the Strait of Hormuz while the two countries work toward a broader agreement. But this isn't like renegotiating NAFTA with our neighbors. There's a decades-long intense animosity here, with Israel also in the mix. And so it's definitely reasonable to expect that we backslide from here based on the negotiations. However, if you want to be optimistic, you can point to the president's True Social post from this morning, where he mentions Iran having already gone through a very productive regime change, tariff and sanction relief being discussed, discussing removing uranium and some nuclear material, and read that as an aggressive and perhaps overambitious declaration of victory, signaling that the administration doesn't have the appetite to continue this war. So, hope there's reason to be optimistic. There's also reasons to consider the fact that the negotiations might not be easy, but it's also worth pointing out that the market held up quite well during this turmoil. It had started declining a month before the war, and investors didn't really capitulate or panic sell. So it's a market that wants to be optimistic, and today's news gave it that opportunity.
And it's so good to have that perspective because I think the initial knee-jerk reaction is to panic and wonder, like, what does this mean for me and my investments? So this is all very important. Now, even before the war, there was an unsettled feeling for the economy. The cost of almost everything is up. So what's the outlook outside of all of the war headlines?
That's a great point. Inflation is higher than the Federal Reserve's 2% target, and the labor market is shaky, which is why you heard the word stagflation thrown around.
Mhm.
Stagflation concerns are significantly overstated and were significantly overstated, in my opinion. But if I go back to what I said to you in mid February, before this all started, when you asked about the possibility of a recession, I said there's always a threat, but it would be a major surprise based on the data that we're seeing. And this is where it becomes hard to model out the war and ignore it. So while recession odds have increased, we're hopefully still in good enough shape to avoid one if this conflict can continue working towards a quick resolution.
Now, what is your advice to the average investor right now?
Yeah, you do really have to ignore the short term and not overreact to global events with your investments, and also separate your personal and political feelings about what's going on from your investment decisions. That's always rewarded investors. Patience has always been a virtue in the markets. That said, if you felt like you had too much risk in your portfolio or wish you had more cash to get you through a rainy day, we're not that far off the market high, and thoughtful long-term based changes can be appropriate. And you have a window here where the market's doing better, where you can make them.
Okay. Now, oil is another topic that has people thinking about their money and prices of things because oil has dropped on the war news as well. But will that have an immediate trickle down effect for home heating oil and gas at the pump?
Yeah, so oil is down about 15% today. Looking at WTI crude, it's trading at about 96, but it was in the 60s before this conflict started. So we're off the highs, which is good, but we're not nearly back to where we were. I'd
Mhm.
expect some relief at the pump, but oil prices need to go further down to get us back to where we were a couple of months ago.
Now, is there anything else that's important for people to understand in this moment? I know it won't be the last time that I come back and say, Sammy, should we be panicking? But in this moment, anything else that's important for viewers to understand that I didn't ask you?
No, I think you hit on all the major topics and talking points and the things that clients are asking us. So I really appreciate the opportunity to share it with a broader audience and talk to you.
All right. Well, Sammy Azzouz, the managing partner from Savant Wealth Management, we thank you so much, as always, for helping all things money and investment to feel digestible and easy to understand.
Thank you, Courtney.
Until next time.
Great.